Good day traders, Richard Jacobs here and welcome to episode 10 for 2018 on our Underdog Trade Education channel. Well, as you would probably have seen, today was a very muted day, pretty much in line with our expectations for a C day. Market printed in a very tight range, I think something like 400 points from high to low, and pretty much didn't go anywhere. And if one looks at the daily chart of the top 40, which is up on your screen at the moment, you can see that candle, really reflects that. It's quite a narrow candle. At the moment, what I see is that we are, let me just highlight that for you, we're in a bit of a range over here. And we're actually going to need the market to move outside of those levels before we get too excited on our intraday trading again. So we're flagging tomorrow as another C day, a C day being that day that we significantly reduce our trade size. In fact, at the moment, that would be trade size null, so we wouldn't take the trades that we're putting out on our WhatsApp group. Those are pretty much just trade signals. So what we're waiting for is we're waiting for the market to either move to the upside and pop out of this range, see if it's got enough momentum, or it doesn't have momentum at the moment, if it can generate some momentum and push to the upside, or if it's going to continue to the downside in line with this broader downtrend that we have in place over here. You can see on the ATR as it ticks back down below its 50 period moving average, it sort of reflects those that range compression that we've been seeing over the past couple of days. And so we're going to wait and see. This is one of those, we've had how many of these days in the year so far? 1, 2, 3, 4, 5, and tomorrow will be the 6th out of 1, 2, 3, 4, 5, 6, 7, 8, 9. So 6 out of our 15 of our trading days has really been the C days where we've stood aside. And it's actually been to our benefit for the most part. When we look at our equity curve, I'll expand on that a bit more. But yeah, we're going to trust our system, and tomorrow will be another one of those days. So just be patient. The moves will come, and when they do come, you'll be well positioned to take advantage of them. Of course, you never get out of a C day except by printing an A day or B day. So when we see the move, it may be quite an emphatic move, and we may miss out on a couple of trades, but that's also fine. You would rather respond to what the market is doing than trying to preempt what the market should and will do. So that's what we're seeing on the daily structures at the moment. If I look at it through the 15-minute lens intraday, and our today's intraday trading action is highlighted by these red lines, you can see here the market popped down a little bit. We actually got stopped out on a over weekend long over there, unfortunately, and then the market pushed the upside again, put in a higher high, higher close, retraced, pushed back up. So we did put in higher highs and higher closes, which would point to short-term upward momentum, but it's quite a choppy day overall, and as I mentioned, printed in a very narrow range. If you were doing the structural thing on this chart over here, highlighted by this broad red kill zone that we pointed out a few days ago, market had put in a higher high, then a complex retracement down into the zone. We highlighted that if you wanted to trade structure over this on this time frame, you'd probably try and get long around about these levels, put your stops in below this zone, and try and ride it towards the previous swing high. That trade's actually working out quite nicely, albeit slowly. And it will be interesting to see if the market can continue to push to the upside and tap in at these all-time highs over here. So certainly, tap in at these previous highs over here, I should say, not all-time highs. So certainly something to keep an eye on as we head into the new trading session. As I mentioned, on our side, we stood aside today, and really, we missed out on probably 30, including slippage, 30 points of loss. So our standard equity curve actually pushed down towards 30 points for the year to date. That's also on the back on that over the weekend long, we took about, I think it was about 140, 150 points of downside over there. Our weighted equity curve, which is the one we focus on because that's the one that generates the money, is sitting at 1,123 points. Again, it highlights that differential, that that benefit of actually assessing the market and trading bigger on the A days and smaller or not at all on the C days. That's really benefited us and kept us out of trouble for most of this month. Still looking pretty good, and that's the reason our current reward to risk is sitting at 3.39 to 1, albeit that our win rate isn't that great. I'll do towards the end of the month, or at the end of the month, I'll do a comparative assessment between trade performances on A, B, and C days, and hopefully that'll give you guys an indication of the relative benefits of making that differentiation on your trading. Right, so that's where we are, and as I said, tomorrow is another C day. If I swing over to the international markets and have a look at the exchange rate as well, let's have a think about how that could play out or influence our own market. This is a chart of the Hang Seng, and as you can see for our chart, it is just in a complete bullish push over here. This thing's barely retraced since mid-December, or hasn't retraced since mid-December. It's pretty much pushed up in a straight line all the way from around about these 29,000 levels to 32,000 levels. That's a massive push for 2018. So that's certainly bullish. Heading into Europe, heading into the UK FTSE. This is an interesting scenario over here. Market had pushed upward in a higher high. It put in a deep retracement, retested this swing low level over here, this higher low, and actually broke it technically. If you look at that candle over there, broken close below. So that's looking a bit vulnerable, and as you can see, I've highlighted on the chart a potential for head and shoulders pattern over here. The market pushed up, and if it pushes down and breaks through this solid line, which lines up with our neckline, we could see a projected target coming in around about these 7580, 7600 level, which lines up with this previous price structure. So some nice confluence over there. Certainly something to keep an eye on. So the UK or the FTSE is looking a bit vulnerable. Germany, see what's happening over there. That's looking relatively bullish, pushing up, putting in higher highs, higher closes. And lastly, the S&P 500, yeah, pushing up nicely, pushing in higher highs and higher closes as well. So on balance, you would be quite bullish in terms of the international market's influences on our own market, for the exception of the FTSE, which is looking slightly vulnerable, and certainly something to keep an eye on. Looking at the currency, we had that early gap down this morning as the rand strengthened off that news flow that I mentioned in the last recording around the potential recall of the president. Didn't really follow through. News seems to be mixed at the moment in terms of when, how, what, pretty much lacking in detail, and so the market's probably not enjoying that too much, or the rand's probably not enjoying that too much. So we got a bit of choppiness, some congestion over here around about or just above the 12 rand level. If we see some kind of clarity manifesting, we could certainly see further downside of strengthening of the rand. The trend is to the downside. The trend is towards a stronger rand at the moment, and obviously a stronger rand is something that holds our market back. So going back to our daily chart, we've got that almost those opposing forces: a strengthening rand versus a strengthening international market, pulling the market in opposite directions, or rather compressing the market in opposing directions. So we end up in a situation where we just pretty much don't go anywhere. Obviously, if something catalyzes to either side, there could be quite an emphatic move on the cards, either to the upside or the downside. So that's why I said, we may miss out on that move, but certainly from a risk perspective, it's better to wait and see what the market does rather than try and preempt it. So that's what's happening on the local front. On the Forex front, our Forex trading challenge, Not too exciting at the moment. We've taken, since the last recording, yesterday's recording, a small loss on USD Japan, and it's pretty much a break-even trade on the Euro Swiss franc long. Both of those, I think we trailed the stops a bit, so the effects are pretty muted. We've got 1, 2, 3, 4, 5 open positions. I'll just run through them very quickly. First one is, I think we looked at this one already yesterday. USD CAD long position over here, pushing to the upside. It's in a bit of a retracement, that's fine. If it can put a continuation move to the upside, it'll also give us a nice opportunity to roll stops again. So yeah, not too concerned about that one. Not that I'm concerned about any of them really. I'll keep on making the point that individually none of these positions can really hurt us. This one's not looking too great though. This is Euro Japan, and as you can see, it pushed down and looked to be pushing down the direction of the trend over here, but now it's rolling to the upside, so we could be under threat in terms of our stop levels. Again, we simply going to wait and see. If we do stop out, that's not the end of the world. We lose £47 on the trade, which is what it's at risk at the moment. Gold's been a bit choppy, but I'm pretty comfortable with this position. Remember, pushed up, put in a complex retracement all the way back down into previous structure over here. We took the move as it started moving up off these levels. We got involved with the long side. It's just chopping along sideways up and down at the moment, so not doing much round about the entry, but still we in this bullish move, so we're looking for that push to the upside. I suspect that we're going to have to see some international market vulnerability before gold starts pushing, or on the equity side at least, before gold starts pushing towards those targets, but let's see what happens. Aussie dollar, US dollar, I think that was the trade we entered today. Long one, fairly standard, pretty textbook. Series of higher highs, higher closes over there, market retraces, we get long, and we're looking for a push to the upside. Again, it's just above entry at the moment. Didn't quite follow through on this move over here, but yeah, we will just wait and see if we can tap into targets. And last one is the USD Swiss franc short that we entered today as well. Again, one of those where market's coming down, putting in a series of lower lows and lower closes. We've retraced back up. We got short, I think, of this candle over there. There are stops. We're not in the money at the moment, so we'll just see if the market can just continue to the downside and tap these previous swing lows over there. So yeah, I mean, it's pretty much just grinding along at the moment. We got nothing huge at risk. No specific opportunities to flag to you guys up front. Just keep an eye on it, as I do every 4 hours. You know, one of the joys of this system is every 4 hours you just have literally a 5 to 10 minute scan of the charts, and you can make your decisions fairly quickly because it's completely mechanical, and you can check in again 4 hours later. You either enter the trade or you don't at the end of the 4 hour period, which is pretty great and easy to manage. So I probably spend about an hour max per day on actually trading these pairs and indices. So guys, that's pretty much it from our side. A bit of a busy day tomorrow, so I'm not sure if I'll get a chance to put out another recording, but certainly will then. If not, I will try for Thursday. So in the meanwhile, all the best with your trading. As I said, be safe, and yeah, I shall chat to you soon. Cheers.